So this is the hard part. It's the same with any technology company. Is it going to get adoption? So this whole world is all about Metcalfe's law. Now, there's no easy Metcalfe's law, just plug it into my computer and it gives me a fair value, right? So you have to estimate it. And you're estimating it by looking at, is the network growing? Are people building things on it? So you make some forecast based on that. So like you'll see tokens like Shiba Inu that retail are trading. And you have to ask yourself, is that really a network or is that just a speculation? Now, in most cases like that, it's just speculation. That's fine. People want to speculate, do what they want, but you're not going to build long-lasting value. So over time, they trend to zero. But what's interesting was the other one like that was Dogecoin, which was this joke crypto that everybody found as a meme and they liked it. It was kind of fun and it's kind of a bit weird. But a lot of people invested in it. And so this was looking like it was a potential disaster in the making. But then Mark Cuban, a famous US investor who owns the Dallas Mavericks, which is a Dallas basketball team that's pretty famous, and he's a very famous guy. He said, you know what, if you guys all own it, we're just going to accept it as payments for anything to do with the Dallas Mavs. And then Elon Musk said, well, if you guys love this, we're going to use it too. So I think Tesla's going to end up using it. And so now what you're creating is the applications layer. So you don't always know, so you need to be aware. Ethereum, very straightforward. Everything's happening there.
Yeah.
The network's growing, applications layer. So, okay, so how does the average person figure out if this is working? And there's an easy hack. So go back to the charting, my technical analysis. All of these assets, these digital assets, Metcalfe's law is exponential in nature. So it means when you draw a linear chart, it always looks like this.
Yeah, yeah.
Most people go, it's a bubble. It's an endless thing. It's a bubble. It's a bubble. And you would have done the same with Reliance. You would have done the same with Google, Facebook, Tesla, all of these. And you would have got them wrong every time because these were network stocks. So what you do to value a network stock is change the scale on your chart to log scale.
Okay.
And then what happens is magic. Most of them end up being in this beautiful channel.
Right.
And they go up and down in the channel. That channel can be 50% because it's log scale.
Yeah.
But the channel essentially shows you network adoption.
Okay.
It's a good estimate. So right now, if you take the chart of Facebook since inception, put it on a weekly or monthly chart on a log scale, it's actually breaking its log channel. So what it's saying, and this is another important thing when you're analyzing technological investments and in crypto, something called the S-curve. These are risky assets, which is why they have so much return, but they're risky. They can also go to zero. And the S-curve is the classic moment when this new technology gets tested by the market or by the users. And it either survives it, and in which case you get the Lindy effect, which means it strengthens the value of the network, or it fails. You know, most startups fail. So if we look at Amazon had a very big S-curve in 2001-2. After the tech crash, most things were going to zero. Amazon was still a bookseller. And everyone was like, should a bookseller survive this? And it fell 95%. But it didn't go bust. And then it recovered. And it started having these waves. And the waves were, suddenly it was trading on a P of 800. And people like me were like, this is ridiculous. It's a bubble. What we didn't realize is the market had started to figure out that it was more than just a bookseller. It could have the opportunity, the probability of becoming a massive online retailer. That starts happening. Then the market starts saying, well, it's an online retailer. It'll never beat Walmart. And then it comes out with AWS, the cloud server. And before you know it, these S-curves get smaller and smaller.
Yeah.
And so what we've got in Facebook right now is an S-curve because people are getting fed up with Facebook itself as a product.
Yeah.
the company, how it uses your data, how it monetizes you, the network's slowing down, it's TikTok and other things. I know you've got some in India that are growing super fast. So Facebook's feeling the threat, but people aren't listening. What Facebook has said is, we are pivoting entirely away from this social media model to a metaverse model.
Yeah.
Now, a lot of people don't like that, so they want to sell it. They say Facebook's lost its way. The entire bet on Facebook is, are we oversold in that logarithmic channel? Is this S-curve the death of Facebook and the death of that network? Or is the market mispricing the new opportunity? And that's what you have to do with this. So logarithmic charts, and if you can do, I don't know what charting products can use regression channels, but I find they're really useful.
Yep.
So you can see, usually they go within the 1 or 2 standard deviations overbought or oversold. Facebook's currently 3 standard deviations oversold. Really interesting to me.
Sure.
So, as you know, being a trader, it's all about position sizing.
Yeah.
And it's all about risk appetite. If you are 30 years old and you have some savings and you want to take risk because you don't have as much as you'd like for the future, but you've got a good job, go ahead, take the risk. Make a calculated, thoughtful risk, not just buying an option and hoping a stock goes up. But if this is your thesis that cryptocurrencies is going to go from $2 trillion to $200 trillion, which is my thesis, I think it's the biggest opportunity I've ever seen. And it's going to be the largest wealth accumulation in all history in the shortest period of time. The network adoption currently for crypto is growing twice the speed the internet did with the same number of users. So back in 1998, the internet was growing at 63% a year, had about 500 million users. Crypto has about 500 million users now. It's growing at 113% a year, which means it gets to 1 billion people by next year or the year after. Yeah.
So when you, sorry to interrupt in the middle, when you say users, I mean, we are talking about users of crypto as a technology, or we are saying the crypto investors?
They're all the same thing. Remember, the network is both the user and the application.
All right.
And the investor, right? It's all the same thing, which is why people struggle. It's a speculative asset. It's not. It's the future of finance. Yes, it's all of those things.
Right. Right.
I've lost my train of thought. Well, yes, with crypto, is it a buy here? So okay, so we're armed with some macro secular trends, which is massive network adoption. We're seeing regulation that is not banning of it. We're seeing in India, it's the second largest adoption of any country in the world of this. India is very meaningful in the size of this. We're seeing US, we're seeing everybody moving into this arena. So should we be a buyer of the dips or a seller of the rallies? If we're in a secular trend that is exponential in nature, then a 50% drawdown is a hell of an opportunity. And you can either be slightly risk averse, in which case you put a small portion of your portfolio, because this is a 70% volatility asset.
Yeah.
So fine, then put 3%, 5% of your portfolio and treat it like an option. It's not going to go to zero, particularly if it's a big one like Ethereum. So maybe it falls another 50%. So can you lose 2.5% of your portfolio? Fine, that's not a problem. But if you're young and you're into technology and you want to take a bet on the future and you've got a steady job and you can afford to take a bet, go for it. Don't do that if you're 70 years old, because you need your money for retirement. But we're all allowed to take a few bets in our life, and for 1 or 2 of them to go wrong. We talked about that at the beginning of the interview. That's okay, but that's not wild speculation. That's thoughtful process building, framework building. Build your investment case, look for confirmation, and then do it. So let me make it really easy for you.
Yeah.
Step back from the noise. Anybody can create a coin. Like anybody can create a startup and say, I'm the new fintech solution for India.
Yeah.
99% aren't worth anything.
Okay.
But some are. Okay. So this is like VC investing, but you've got big products like Ethereum, which is now like investing in Google 20 years ago, right?
Yeah.
So why are these other tokens? It's straightforward. Bitcoin is incredibly secure in how it's constructed, which is this proof of work. You have to solve the algorithm to mine Bitcoin, and you're protecting the network, and it's slow. And it's not very good to use for high input things. Now, people are building layers on top that do that, but basically the world's moved on quite fast. But it's incredibly secure, and there's never can be more than 21 million. It's a very understandable, unique thing. But it's a bit slow for some applications. Ethereum, incredibly adaptable. It's an applications layer tool that you can build on. So fantastic. Problem is the network is so in demand that the fees of using the network are high.
All right.
So, and also it's still not fast enough for some of the really crazy fast payment systems we need. You know, if we think of the Internet of Things, where all of the everything digital around us is streaming stuff, we will have streaming payments. Ethereum cannot handle that. So most of these other what called layer one chains solve one of two things. They're either faster or they're cheaper. But they all come with a trade-off, which is they're more centralized, so they're less secure.
All right.
So that's basically all of those are solving different things. So then again, we look at them and saying, well, who's using these? What's growing? So we saw a lot of developers building on top of Solana. We're seeing interesting network growth in Terra Luna and AVAX. Those are the three that we've seen. Now, will that last? Because Ethereum's about to go through some changes that should make the network cheaper to use and maybe faster. So do we need these other ones? We don't know, but this is what these are the bets we can make, is one thing versus another, much like we would in the equity market by saying, you know, we think this company is going to outperform that company. So
Sure.
Here's the magic of Bitcoin or crypto, all of crypto. You're thinking like somebody who's lived in a banking world.
Yeah.
But the difference here is you can store these assets, and you should yourself. So it's called cold storage. There are little devices like a Ledger Nano X or a Trezor, and they basically, your coins on the exchange, they may be commingled with other customers, but you transfer it to your wallet, you own it. You'll hear an expression in crypto, not your keys, not your coin. So you own the private keys, they're yours. It's the same as, do you keep your gold by golding, you know, do you have certificates, or do you physically hold your gold in a safe? Right? So you can do that in crypto at scale, and you can trade out of that. Unlike gold, where it's a pain to transfer it out of the vault, and do this in a little device, secures it, and you have the keys, and nobody else can take it. The world can go bust. There can be the biggest debt crisis on earth, and nobody can take that away, because it is immutable on the blockchain. So it's one step further. Open an account, get used to it, do it on an exchange. Most of the exchanges are pretty good, you know, but the next stage is, okay, I need to take responsibility for my own security of my asset. That's okay. But, you know, because we're so used to a financial world where we don't. You know, the poor people in Cyprus, when the government took 90% of their savings out, and the same happened in Argentina, it's happened in Lebanon, it happens. That kind of stuff in this new crypto world can't happen.
Very volatile. But do you see any other signs of tech analysis working well in this market?
It's incredibly well. I mean, most people use technical analysis. It works incredibly well. It depends whether you're a trader. So a lot of traders love crypto because it's volatile. So you've got big swings. So if you like to buy short things, buy things, trade around, it's very good, and charts work very well. So because it's, you know, all charts are human behavior.
Yeah.
That's all they are. the difficulty with crypto is it's exponential in nature. So most other assets are mean reverting. So things like oil most commodities are mean reverting. So once you get high prices, it's met by new supply and the price comes down.
Yeah.
But these things are exponential. Most equities are quite linear. Yeah. So it's quite hard to get a handle on, which is why you're always flipping between the log chart to give you understanding and the traditional chart for the basic technicals. But I use both. I use technicals on the log chart as well. But again, I tend to be longer term time horizon. But stuff like this dip here that we've had, the 50%, sounds big, but you put it on a log chart, doesn't look like anything at all. It's like minuscule. And then you start putting the trend channel on that we talked about, and you start thinking, okay, one standard deviation oversold. Does it feel like it should go to 2 standard deviations or not? Then you start constructing the usual technical analysis, looking for supports to give yourself odds that you're right and a stop loss where you could be wrong. Okay. Yes. So as a investor now, you're basically having to be a VC investor. You're needing to decide what basket of digital assets do you want to own that you think are going to do well over time. Now, what's the right time horizon for a long-term investor, for a decent investor here? You probably should be 3 to 10 years.
All right.
Because we're talking about network adoption at scale that's going to billions of people, right? It's like if you just made a bet on the internet in 1999 and then said, well, I'm trading on a 6-month time horizon, doesn't make sense. Or same with mobile phones when they got introduced, right? So you need to think of your time horizon. Then you probably want to spread it across a basket. So the most proven 2 protocols are obviously Ethereum and Bitcoin. So you probably heavily overweight those, but maybe you want some DeFi and you want some of these layer 1s we talked about. And what's different versus VC is it's actually liquid. So you can change your mind. In VC, it goes to 0 or it goes up in venture capital. But this, you can change your mind. Then I would look at the longest time horizon chart that you can. Bitcoin goes back to 2009, 8, and Ethereum back to about 2015, and you start drawing the biggest charts that you can.
Okay.
You can use the cycle of Bitcoin and Ethereum to understand where the whole market is, because the other charts, some of them are only 18 months old.
Yeah.
So you don't have enough really to give you, but you use the overall market, the bigger tokens, to give you an understanding of where we are in the cycle. And then I tend to use very long-term charts, then weekly charts, and daily charts I just use for observation. All right. Because that's when, that's where all the noise is. I mean, and crypto Twitter and things like that, it's down to hourly charts. I use the daily chart just to observe and watch what's going on. The weekly chart is the thing that probably drives me to make most of decisions, like, do I want to add here? Do I want to reduce here?